If you came here hoping I would tell you how to double your money in 3 months, you are going to be disappointed. If you came here willing to let an old man spend 20 minutes pulling you out of your financial fantasies, then you should stay. I am Charlie Munger, and in this video I want to answer a very simple question. If I had to earn my first million again starting as an ordinary young professional today, what exactly would I do? And just as important, what would I refuse to do? Let me give you the conclusion up front so you can decide whether to stay. Your first million is not an intelligence test, it is a character test. The market rewards people who are willing to be boring, patient, and slightly less stupid than average for a very long time. That is all. If you can accept that, you can keep watching. If you cannot, you can go and find something more exciting. When people ask me, Charlie, how do I make my first million faster? I usually answer with something that irritates them. I say, first, learn to go slow. Investing is not fireworks. It is more like a gas stove under a heavy pot. If you turn the flame too high, you do not get tender faster, you just burn everything. I have lived almost a century. I've seen every kind of financial animal you can imagine. The pattern never really changes. I have seen young lawyers, engineers, and bankers making 6 figures a year who are more anxious and more broke than a factory worker who quietly saves on paper. They are successful. In reality, they are owned by their mortgages, their car payments, their credit cards, and their need to impress people they do not even like. So let us define wealth correctly at the start. Wealth is not your income. Wealth is how long you can live on your own terms if you stop working tomorrow and still sleep well. Your first million is simply the point where you can look at your life and say, if I stay rational, money is now my employee, not my master. To get there, you do not need genius. You need 3 boring things. A lifestyle that does not eat your future, a mind that does not sabotage you, enough patience for compounding to do its work. Everything else is decoration. Let us start with the most uncomfortable truth. Most people are not poor because they earn too little. They are poor because they spend too much too early on the wrong things. When I was young, I did not live in some glamorous mansion. I had a small, unimpressive place and even smaller bank accounts. What I did have was a simple rule: spend less than you earn every month, no exceptions. Not when it is convenient, not after this vacation. Every month, if your lifestyle constantly adjusts upward to match or exceed your income, your first million is not a plan, it is a fantasy. Young professionals often tell themselves very sophisticated lies. I work hard. I deserve this. My salary will grow. I can borrow against the future. Everyone at my level is living like this. The market does not care how hard you work. Debt does not care how much you deserve. Your future self will not thank you for today's vanity. Here is a sharp mental test you can do tonight. Open a blank page and write 2 numbers. How much you earned last year. How much your net worth increased. If the second number is tiny or negative, you are not on the path to a million, no matter how smart you think you are. You are financing a theater production called Looking Successful, and that show has a very expensive ticket. Most people think wealth comes from being clever, making brilliant bets, spotting secret opportunities. That is nonsense. In my own life, what worked was almost the opposite. I once said it is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid, instead of trying to be very intelligent. If you want to fail to ever reach your first million, the recipe is quite simple. Turn the market into your casino. Borrow money to impress people. Trade frequently because you are bored. Chase whatever everyone is suddenly talking about. You do not need 10 rules to become wealthy. You need to stop doing the small number of things that can blow you up. So ask a better question. Instead of, how do I make a million? Ask, what behaviors virtually guarantee that I never get there? Then cross them out of your life, one by one. Let me name a few of these landmines. You need the market to entertain you. It will eventually punish you. I spent decades watching investors up close. Some people check their stocks 10 times a day like a patient checking his blood pressure every 5 minutes. Their hearts were very active. Their results were very poor. I never saw someone get rich by being constantly excited. People do not say, I want to gamble. They say, I am trading. I am managing risk. I am being active. They are lying to themselves. What they are really managing is boredom. Investing is one of the rare fields where more effort does not automatically mean better results. In fact, beyond a certain point, more activity usually means more mistakes, more fees, and more stress. If you want adrenaline, go play extreme sports. At least there you only risk breaking your bones, not your future. The market is not your friend and is not your enemy. It is a machine that every day says, here's a list of prices. Do you want to do something stupid today? Your first million depends on how many days in a row you can honestly answer no. By the way, if what I'm saying sounds harsh but also strangely reasonable, that is a good sign. It means your brain is fighting your impulses. Take 3 seconds now, hit like, subscribe, and tell me in the comments one thing you're going to stop doing with your money after watching this. Not what you will start, what you will stop. The act of writing it down already shifts your behavior a little. All right, let us go deeper. If you really want a fast way to destroy your first million before you ever see it, borrow aggressively. Debt is a wonderful tool for building bridges. It is a terrible tool for financing stupidity. I have seen a very reliable pattern. A person feels behind. They want to catch up quickly. They discover credit margin, leverage. For a while, it works. Then one bad decision arrives and everything unravels. There are 3 classic ways for smart people to blow themselves up financially: addictions, bad life choices, and leverage. The first 2 ruin your life. The last one ruins your balance sheet. When you mix them, you get a disaster that writes financial history books. If you buy a foolish stock with your own cash, you will suffer. If you buy a foolish stock with borrowed money, you may disappear. Young professionals often feel that everyone is doing it. Everyone is taking loans for nicer apartments, nicer cars, opportunities. Remember this. When you borrow, you are betting your future hours of life against your present impulses. I am not saying all debt is evil. I am saying that using debt to speed up a path you do not fully understand is playing Russian roulette with more bullets in the gun. Your first million should be built on solidity, not on hope. Investing books talk endlessly about market risk, interest rate risk, credit risk. Those are footnotes. The main risk in your financial life is always you. I've seen men with PhDs, mountains of data models, lose fortunes because they could not manage one thing: their own emotions. When prices go up, they feel like geniuses. When prices go down, they feel like victims. A person like that is not an investor. He is a puppet. The strings are pulled by greed and fear. Here is a very simple rule. If a 10% fall in your portfolio makes you unable to sleep, you are either invested in the wrong things or you are invested with the wrong mindset. Both are your responsibility. In bad markets in the 70s and 2008, I watched brilliant investors go from swagger to panic very quickly. The common pattern was simple. They thought their intelligence gave them immunity from loss, so they took risks their temperament could not handle. When the storm came, they broke. The people who survived and later prospered were not the loudest. They were the ones who had kept their leverage low, their lifestyle under control, and their heads clear. Your first million is a stress test of your personality. If you cannot stay roughly rational when everyone else is losing composure, money will not stay with you for long. Everyone talks about compound interest like it is a cute magic trick. Very few are willing to live in a way that allows compounding to work. Compounding requires 3 rare things: time, discipline, a willingness to be bored while the process works. People want the result of compounding without the lifestyle that makes it possible. It is like wanting to be an athlete without the years of training. In my partnership and later at Berkshire, the big money was not made by constant brilliant moves. It came from a small number of decisions that we sat on for very long periods. I once said the big money is not in the buying or the selling, it is in the waiting. Waiting is very hard for young minds conditioned by notifications and instant rewards. The market creates a test every day, very similar to the famous experiment with children and marshmallows. You can eat one now, or you can wait and have two later. Most adults still behave like the child who grabs the candy. They cannot resist the urge to act, even when action is clearly harmful. They trade because being quiet feels like failure. You will see people who in 10 years made 1,000 trades and ended up with nothing but stories. You will also see people who in 10 years made a small handful of clear, patient decisions and ended up wealthy. The difference is not luck, it is temperament. Your first million depends far more on your ability to endure long stretches of apparent nothing happening than on your ability to find the next exciting opportunity. The hardest thing in investing is not buying, and it is not selling, it is sitting still. Most people cannot stand the empty space. They feel that if they are not constantly adjusting, they are irresponsible. In reality, constant motion is often the most irresponsible thing they can do. I have seen investors who restructured their portfolio every time there was a headline. They were not investing. They were arguing with their own anxiety. Buffett and I spent years literally doing nothing when the prices were wrong, not sleeping, not panicking, just waiting. He once said that cash is a call option with no expiration date. What he meant was simple. Cash has the right to act later when the odds are finally in your favor. Most people treat cash as a burning object that must be thrown into something, anything quickly. If you cannot tolerate holding cash when nothing is attractive, you will never be in a position to act boldly when things become truly attractive. Each major crisis was the same exam written in different fonts. The question was always, can you endure being called an idiot for not joining the crowd and still act rationally when everyone else is terrified? People who passed that exam moved much closer to their first million. People who failed reset to zero. As people get more education and more money, they are often seduced by complexity. Complex language, complex products, complex strategies. They think it signals sophistication. In markets, complexity often signals danger. I have seen many highly intelligent people fall in love with exotic financial instruments they barely understood while thinking they were outsmarting everyone. For a while it works. Then the tide goes out, and as Buffett likes to say, you find out who has been swimming without clothes. At Berkshire, we like simple businesses, insurance, railroads, consumer products that a child could understand. Why? Because if we can truly understand how something makes money and why it will likely continue to do so, we can sleep at night. If your investment requires you to pray that volatility stays low, or that interest rates never move, or that a complex model continues to behave, you are not investing, you are hoping. I do not want to be the cleverest man in the graveyard. I want to be the man who avoided the stupid risks that were completely avoidable. Simplicity keeps you honest. It forces you to admit what you do not really understand. Your first million does not require a genius-level strategy. It requires that you do not let fashionable complexity pull you away from things you can actually judge. So when you hear the words guaranteed high return with low risk in the same sentence, remember this. If such a thing truly existed at scale, the last thing its creator would do is put it on a brochure for you. People are always looking for a new formula, a new trick, a new book they have not read. They imagine that somewhere there's a secret chapter that will finally explain how to get rich. The unpleasant truth is that the secret has been public for a very long time. The price of wealth is not knowledge, it is personality change. To earn and keep your first million, you must delay gratification. When every advertisement urges you to indulge, you must sit with boredom while others chase excitement. You must accept being misunderstood when you refuse to join a crowd. You must watch others brag while you quietly build. You must admit your mistakes quickly instead of defending them loudly. That is why so few people succeed. They are perfectly capable of understanding the ideas. They are simply unwilling to pay the psychological price. The most valuable asset you will ever own is not a stock, a property, a business, or a coin. It is a clear mind that can stay calm and rational under pressure. If you can protect that asset, the first million is a matter of time. If you neglect that asset, no amount of income will save you. Let me wrap this up in plain language. If I were starting again as a young professional today and wanted to reach my first million, I would do 4 things ruthlessly well. Live below my means every year, and treat lifestyle inflation as a direct attack on my future freedom. Avoid stupidity more than I chase brilliance, especially stupidity involving debt, leverage, and showing off like compounding work, which means holding good assets for a very long time and refusing to let boredom dictate my decisions. Keep it simple, only investing in what I truly understand and always keeping cash for the rare moments when the odds are extraordinary. None of this is glamorous. All of it works. Most people will not do it, not because they cannot, but because they do not like who they have to become in order to do it. They want the million, but they do not want the discipline. The market is very fair about that. It gives each person exactly what their behavior earns over time. If something in this video bothered you, good discomfort is often the sign that one of your illusions is being removed. If something in this video gave you clarity, even better. Clarity is the rarest currency in finance. Now, I want you to do 3 small things. First, like this video, if you want more content that treats you like an adult, not a customer for fantasies. Second, subscribe to the channel so you do not miss what comes next. Third, leave a comment with 1 sentence. From today on, I will stop, and fill in the blank with 1 financial behavior you know is hurting your future. Writing, it makes it more real. In the next episode, we will talk about 5 fake assets you must never touch in your lifetime. Not fake in the legal sense, fake in the sense that they look like wealth but quietly eat your freedom. I will walk you through real stories, hard lessons, and a few very sharp quotes that cut through the nonsense. If you want to really understand the deep logic behind getting rich slowly and staying rich quietly, you will not want to miss it. Remember, you do not need to do a lot of brilliant things in life. You just need to avoid doing too many unforgivably stupid things for a very long time. That, my young friends, is how you earn your first million the right way.